All right, let's dive into the next question. PQ7-7. Copper Inc. is in their second year of business. They have the following balances at the beginning of 2018. Accounts receivable. So this is the beginning balances. So 0 accounts receivable is 96,780. An allowance for doubtful account is negative 5,800. Is negative because it's a contra account and it reduces accounts receivable. Negative doesn't mean it's decreasing. That account is actually increasing. It has a positive balance, but once again, since it's a contra asset account is negative. 0, 0, 0, 0, 0, 0, 0. Okay. Then transaction number 1 is total cash sales during the year. So remember, this is cash sales. Cash is going up by 225,000. This we have cash sales. Sales revenue is also going up by 225,000 because we earned revenue. We earned income. Transaction number 2 is total credit sales during the year terms N30. So this is going to be accounts receivable now. 780,000. And then sales revenue is going to go up by 780,000. Products are returned by customers due to errors in shipping, quantities, or type of products. Let's go back to transaction number 2. So remember, in prior chapters, whenever we have a sale, even in transaction number 1, whenever we have a sale, it's a 2-part entry. However, since we're focusing on accounts receivable and bad debt expense, we're going to ignore the second part of the entry, which is going to be the expense portion. So we're going to ignore the cost of goods sold increase and the decrease in inventory for the purpose of this chapter. But in previous chapters, whenever you have a question about merchandising inventory, or you have a question about the inventory cost methods, those are very important. So please keep that in mind. Okay. Now let's go back to number 3. We returned a product. So products are returned by customers due to errors in shipping quantities or type of products for 19,750. So we're going to reduce our accounts receivable by this amount. And then we're going to decrease our sales returns and allowances by that exact same amount. And remember, this is a negative number because it's a contra account and it reduces our sales revenue. Simple as that. Now, transaction number 4. Cash collections of accounts receivable. So we collected cash. The cash goes up, increase of 739,525. And as a result, our accounts receivable is going to go down by the exact same amount. It's going to decrease because we've already collected this amount. We're eliminating the receivable that we're eliminating the amount of money that people owes us by that amount because they've already paid that off, correct? So they made an error here, but let's just use transaction number 4 as well. So write-off of accounts receivable that are determined to be uncollectible. Cooper has written off a similar amount for the last 2 years. So they're writing off 8920. So we got confirmation now that this is officially, we're not going to receive it because the company went bankrupt. So we're going to reduce that balance over here. And by the same token, we're going to reduce the balance and allowance for doubtful accounts. Since this is a contra account, a reduction in this account is going to be a positive 8920. Then let's fast forward to transaction number 5. A customer who was previously written off sent in a check. So this is a 2-part entry because remember, we wrote off their account, so the account no longer exists within our accounting system. So we have to add it back. So we're going to increase our accounts receivable by 892. And then we're going to decrease our allowance for doubtful accounts by negative 892. Remember, it's the opposite effect as a contra account. And now the second part of the entry, we actually received cash for it because when they sent us a check, that's equivalent to us receiving cash. That's how they're paying us. We're going to increase cash by 892, and by the same token, we're going to reduce accounts receivable by 892 because we actually received that payment now. Now, Cooper estimates that in transaction number 6, so Cooper estimates that 6% of the ending accounts receivable will be uncollectible in the upcoming year. This is consistent with the estimate made in 2017 and 2016. So what we're going to first do is calculate the total of the AR, or accounts receivable. I'm going to put in a simple formula to arrive at 108,585. Now to calculate the ending balance in allowance for doubtful accounts, we're going to first type out the balance in accounts receivable, which we know is 108,585. We're going to multiply this by the percentage uncollectible, which we know it is 6% or 0.06. We're going to multiply this to calculate the new balance in AFDA, allowance for doubtful accounts, of 108,585 times 0.06, right, or 6%. So 6,515.10. For the sake of keeping it consistent, let's just round this to 0 decimal places. So the current balance in AFDA is going to be a product of the negative 5,800 plus 8920 plus negative 892. We have a positive balance of 228. And let's rewind a little bit. So remember, this balance we calculate over here is going to be the new ending balance in AFDA. Very important. So let's color code that again. Okay, so now this is a positive number, which is fine. All that means is that our estimate was off, and the actual write-off was more than we originally estimated it. So that's why it's positive. But the new balance in AFDA is a negative number. So it is negative 6,515. So we have to figure out the adjustment. So essentially, we have to get 2228 equal to negative 6,515. We're going to do that through a simple formula. So 2228 plus question mark equals negative 6,515. To rearrange this formula, we're going to do negative 6,515 minus 2228. We subtract it because we have to isolate the question mark. So we're going to take this and bring it over to this side over here. And once we do that, this changes into a negative. So negative 6,515 minus 2228 gives us negative 8,743. That means that our allowance for doubtful accounts is going to increase by this much. And by the same token, our bad debt expense is going to increase by this much as well. This is negative because allowance for doubtful account increases on the negative side because it's a contra account. This is positive because it's an expense and our expense is increasing. Simple as that. All right, let's keep pushing forward. Next, we're going to do the balance sheet of Cooper. So once again, 3-part title, Cooper Inc. balance sheet. And this is going to be for the second year of business, so 2018. So this is going to be at December 31st, 2018. And in this case, we're just going to have accounts receivable, which we know is 108,585. Then we're going to have allowance for doubtful accounts, which we know is negative 6,515. And we're just going to subtract these two, net realizable value. We're going to take the 108,585 plus negative 6,515 to arrive at 102,070. The next question is to prepare the income statement. Once again, we're always going to prepare it in a good format. Cooper Inc. income statement. And then for the period ending December 31st, 2018, we're going to have operating expenses, and we're going to go straight to bad debt expense, which we know it is 8,743, right? That's the only balance in there, so that's going to be the ending balance, obviously. So now the next question, do you think that estimating uncollectible accounts receivable at 6% of outstanding accounts receivable at year end is appropriate for this business, given the history? Support your answer with reasoning. No, the estimate seems low. Simply put, because after this write-off, right? Because we're estimating that it's gonna be 5,800, but the actual write-off was 8,920. So the actual amount that we didn't collect is much more than what we originally estimated. So simply put, the estimate seems too low, and we're given the reasoning is what I just explained to you guys. If you determine that 6% is not appropriate, what percentage would you use? Support your answer with reasoning and calculations if necessary. So we're going to essentially take the actual write-off, which we said was 8,920, and we're going to divide this by last year's accounts receivable balance. And last year's accounts receivable balance was 96,780. And then this is going to give us how much of the actual write-off was in terms of percentage of total accounts receivable. So 8,920 divided by 96,780 gives us 9.2%. So this number is a better representation of what is deemed to be uncollectible of total accounts receivable. So going forward, we should use 9.22% instead of 6%.